The U.S. Jobs report is one of the most important indicators of the health of the U.S. economy. It shows how many jobs were added or lost in the previous month, as well as the unemployment rate and the average hourly earnings. The jobs report reflects the strength or weakness of the U.S. labor market, which in turn affects the demand and supply of base metals and gold. Base metals are metals that are widely used in various industries, such as copper, zinc, nickel, aluminum and iron. They are sensitive to changes in economic activity and industrial production, as they are needed for construction, manufacturing, transportation and infrastructure. Gold, on the other hand, is a precious metal that is often seen as a safe haven asset and a hedge against inflation and currency devaluation. The U.S. jobs report can have different impacts on base metals and gold prices depending on the market expectations and the actual results. Generally speaking, a strong jobs report that shows robust job creation, low unemployment and rising wages is positive for base metals and negative for gold. This is because a strong jobs report signals a strong U.S. economy that can support higher demand for base metals and also increase the likelihood of the Federal Reserve raising interest rates to curb inflation. Higher interest rates make gold less attractive as an investment, as it does not pay any interest or dividends. On the other hand, a weak jobs report that shows sluggish job growth, high unemployment and stagnant wages is negative for base metals and positive for gold. This is because a weak jobs report signals a weak U.S. economy that can reduce the demand for base metals and also decrease the likelihood of the Federal Reserve raising interest rates to stimulate growth. Lower interest rates make gold more attractive as an investment, as it reduces the opportunity cost of holding gold. For example, in October 2022, the U.S. jobs report showed a sharp rise in non-farm payrolls of 517,000, which was much higher than the expected 187. The unemployment rate also fell to 3.4%, compared to expectations of 3.6%. This strong jobs report boosted the U.S. dollar index and bond yields, which put downward pressure on gold prices. Gold fell 0.9% to $1,695.40 per ounce after the release of the report. In contrast, in November 2022, the U.S. jobs report showed a modest rise in non-farm payrolls of 261,000, which was lower than the expected 205. The unemployment rate remained unchanged at 4.6%. This weak jobs report weakened the U.S. dollar index and bond yields, which lifted gold prices. Gold rose 3.19% to $1,684.90 per ounce after the release of the report. Therefore, the U.S. jobs report can have significant implications for base metals and gold prices depending on how it compares to market expectations and how it affects the outlook for the U.S. economy and monetary policy.